Hello everyone, and welcome to Next Vault. Today, we're discussing a simple yet powerful investment strategy. How to invest $50 per month for 1 year and grow your capital. You don't need to be a finance expert to succeed. All you need is consistency, patience, and a solid action plan. Let's get started. Why invest regularly? Why invest regularly instead of making a lump sum investment? This approach reduces the risk of market timing and is known as the dollar cost averaging (DCA) strategy. By investing a fixed amount every month, regardless of whether the market is up or down, you smooth out market fluctuations and buy at various price points. Where to invest $50 per month? So where should you invest your $50 per month to maximize growth? Here are some popular options that work well with small budgets. ETFs, exchange traded funds. ETFs are baskets of stocks or bonds that track a stock index like the S&P 500 or the CAC 40. They are ideal for low-cost diversification. For example, you could invest $50 per month in a global ETF that tracks the performance of major companies worldwide, such as Vanguard All World or iShares MSCI World. Individual stocks. If you prefer a selective approach, you can invest in individual stocks. Focus on solid companies that regularly pay dividends, like Apple, Microsoft, or L'Oreal. These companies tend to grow over time, and dividends can be reinvested to create a compounding effect. Robo-Advisors. For beginners who don't want to deal with investment decisions, Robo-Advisors like Nalo, Yomoni, or Money Farm are excellent options. These platforms create diversified portfolios and manage your investments automatically based on your risk profile. Fractional shares. Some platforms now allow you to buy fractional shares, meaning you can invest $50 in expensive stocks like Tesla or Google without needing to purchase an entire share. This makes diversification easier, even with small budgets. How to monitor your investments. Tracking your portfolio's performance is essential. Use apps like eToro, Revolut, or Delta to monitor your investments, adjust your positions, and track your returns. However, don't panic if you see short-term declines in value. Stock market investments require a long-term mindset, and patience is key to success. What returns can you expect? What kind of returns can you expect from investing $50 per month for a year? While stock market returns aren't guaranteed, the market has historically provided annual returns of around 7% to 10% over the long term. If you invest monthly in an ETF tracking the S&P 500, you could earn a return of approximately 7%, 8% after 1 year, resulting in a gain of around $60. Though it may not seem like much initially, the long-term effect of compounding can exponentially grow your capital, making consistent investing highly rewarding. Risks to consider. It's important to remember that stock market investments come with risks. Markets can fluctuate, and you may experience losses in the short term. However, by diversifying your investments and adopting a long-term strategy, you can mitigate these risks. Always avoid investing more than you're willing to lose, and be patient to see results. Conclusion. You now have everything you need to start investing $50 per month for a year and steadily grow your capital. The key is starting early, staying disciplined, and remaining patient. If you begin today, you can look forward to seeing results in a few years. If this video helped you, don't forget to like, subscribe to Next Vault for more financial advice, and leave a comment if you have any questions. See you soon for another video.